Hi, I'm David Florida. I'm a realtor with Red House Realty. This is my YouTube channel. Like and subscribe down here. In this video, I'm going to give you a step-by-step guide on how to buy a condo in Toronto. This is going to be a fairly long one. Let's get into it. The first thing you want to do is get your finances in order. Your lender will require a few documents from you before you get started. You will need your credit report. Your lender can run this for you. You'll need your employment letter. It's got to show your job title, your status, how long you've been there, and your salary. Your T4 from last year. This will verify your income against what is stated on your job letter, and your notice of assessment from last year. This will confirm that you paid your taxes last year. Now, if you didn't file your taxes last year, you're gonna have to get that situation in order before you apply to get a mortgage. The next thing you wanna do is assemble your down payment. You'll need at least 5% of the purchase price for your down payment if you're buying a condo under $1 million. If you're buying a condo over $1 million, you'll need at least 20% of the purchase price to put down. If the money is not easily accessible, for example, if it's in mutual funds or if it's in an international bank, you should put a plan together so that you'll be able to have it on hand when you close a deal. If your down payment is in the type of investment vehicle that can easily fluctuate, you should consider putting it into a savings account so that it won't be threatened by market activity before your deal closes. It's increasingly common for first-time homebuyers to receive all or part of their down payment as a gift. If this is the case with you, your lender will probably require you to have it in your bank account for a certain number of days, usually 90, before you qualify for the mortgage. The bank will also ask you for a letter from the person who gifted it to you. Similarly, if your down payment is coming from outside of Canada, it'll need to be in your bank account for at least 90 days before closing. If you want to take advantage of the $35,000 home buyer's credit, then that money will need to be in your bank account for at least 90 days before you close. Your lender will give you the details on all these rules as they apply to you. Now, you'll want to make sure your deposit is accessible. You'll need to put forth a deposit when a deal is reached, usually 5% in Toronto. You'll need to have access to this money, and it will need to be paid within 24 hours of closing a deal. Sometimes, in Toronto especially, in the case of a bidding war, having this money on hand helps tip the odds in your favor of getting the place you want. So you want to make sure you have this money accessible and available to you so that you can get it when you need it. If your deposit is in an online bank or in an RRSP, you'll want to transfer it to a bank that you can easily access it from. If you're buying a home from money withdrawn from an RRSP, you have a year from the time you withdrew the money from your RRSP to buy the home. Again, your lender will clarify all these rules to you. Also, talk to your lender about government programs and rebates. There are programs that can be very helpful for first-time home buyers to purchase their condo. There's the home buyer plan that I mentioned earlier, where home buyers can borrow up to $35,000 from their RRSP. Of course, they'll have to pay it back. There are land transfer tax refunds for both Ontario and Toronto. If your down payment is less than 20% and the price of the condo you're buying is less than $1 million, you'll want to ask your lender about CMHC loan insurance. You might be able to participate in the first-time home buyer incentive if the price of your condo is less than $565,000. And once you've gathered all this info, it's time to get pre-approved for a mortgage. Now, getting pre-approved for a mortgage for a condo is different from getting pre-approved for a mortgage for a freehold home in a few ways. Lenders will take into account the maintenance fees of a condo, and they'll factor those fees into how much you can afford to pay for your condo. If you're buying a condo that's less than 500 square feet, many banks will require a 20% down payment for that purchase. Some banks won't finance them at all. Many banks won't finance condo hotels. Some buildings are problematic, and it will be very difficult to get financing on them. CMHC and other lenders won't give you financing on them because of perhaps problems structurally in the building, or the condo corporation may have financial issues, or might be involved in some legal battles. Your realtor will want to notify you about those before you make an offer on anything like that. You will always want to put a financing condition in your offer. If you talk to your lender and your lender recommends against putting a financing condition in your offer, you will want to hear a very compelling reason from your lender to not do so. And the final thing about getting all your paperwork together is educating yourself on closing costs. Now, your realtor's fee will be paid by the seller, but you're gonna have things like land transfer tax, municipal land transfer tax in Toronto. There might be lender fees, there might be appraisal fees, and any adjustments you have to make. For example, there might be some prepaid things that the current owner of the condo has already paid for, and there'll have to be some adjustments made there. You'll want to be aware of all those before getting started. Now there are the costs of owning a condo that you're going to want to think about. For example, there are the condo maintenance fees. It's a surprise to a few people that condo maintenance fees vary so much between buildings. Some are very high, some are quite low. They almost always include things like usually water, the garbage, the common elements, building insurance. They may or may not include hydro, usually these days not. Usually gas or air conditioning, it's about 50-50 right now. What's included or not included in the maintenance fees can significantly affect your financing options and your monthly carrying costs. You want to note, you want to be aware that maintenance fees can change every year, and if you're in a new condo, you can expect the first few years of maintenance fees to increase pretty significantly as time goes on. Other expenses you're going to want to be prepared for are things like your home insurance, your property taxes, and the media expenses like internet, home phone, cable TV, whatever of those you use. You're going to want to be prepared for that. You will want to be aware of special assessments. Special assessments are unbudgeted, unplanned expenses, usually very large, and it is the owner of the condo units that incur these costs. When reviewing the status certificate, your lawyer will look up the history of special assessments, and if there are several of them, it can usually be a red flag that your lawyer will warn you about. So that wraps up getting your preliminary paperwork in order before you buy a condo. In part 2, we're going to look at how to figure out what the best condo for you will be. Click the link down below to hear all about it.